So I'm going to briefly talk about something that is on the mind of many people, the interest rates. They have continued, with a little peaks and valleys to go up. We had a team meeting this week. The expectation is going to be another couple of bumps up. And the hope and the expectation is that at some point in 24, they may start to tick down. Okay? So we're hitting 7.31% right now. And it's keeping a lot of people at bay. People that want to upsize, downsize, or enter into the housing market. So it's an interesting dynamic, and I think, let's take a quick look here at the historical data. It's going back quite a ways, 71. It's funny because we are right at this moment. This chart has got us at 7.31. So when I first bought my first home was 1999, 6.74, and the rates were climbing. I forget exactly when I moved in, but it's not too dissimilar to where we are right now. And, what happened was, with COVID and everything, we had many people getting low rates, 2%, 3%, 4%. And obviously, if you have refinanced or purchased a home and your interest rate is 2%, 3%, 4%, it's difficult to mentally wrap your head around selling that and getting an interest rate that could be over 7%. That's a big difference on a monthly basis. Now, I think the low rates in the 2s and 3s and 4s, but definitely the 2s and 3s were kind of an anomaly. You could see, the other historical lows it made it into the 3s in 2012. But we've had much higher rates too. Look at this craziness in the 80s, 18.44%, 1981. Right? So it's an interesting thing when you stop and take a moment to look at the graph. So yeah, are we high here? Yes, especially compared to the 2s and the 3s, we're high there. But historically, are we very high? No, we're not historically very high. Does it impact everyone's affordability of houses? Yes. And you combine it with the increased cost of housing and the inflation and so on and so forth. It's a challenging situation. I am not minimizing, trivializing, or denying that. But I will say that the expectation due to the lack of inventory is that the houses are going to appreciate next year over year, and the year after that, because the housing shortage isn't going to be solved in short order. That's going to be with us for a while. So with the rules of supply and demand, and the reality of it is, it's going to keep house prices pretty high and probably appreciating year over year for the foreseeable future. So my thought is, it's an election year next year. The hope is that the rates do tick down, and as soon as the Fed see the what is it called? I'm forgetting the word. I'll have to edit this part out, but the inflation. As soon as the Fed see the inflation rate back down to 2%, they're going to put a pause, stabilize the interest rate hikes, and even possibly tick it down. If these rates tick down back anywhere near in the 5s, 5.7, 5.8, the expectation is a lot of the people that have been waiting will stop waiting. So if this happens, let's say hypothetically, in Q2 of next year, year-over-year home values are up. Interest rates may get lower, which is great. You say that's fantastic. But again, housing values went up. They appreciated. And what's going to happen if we get back into the 5s? The level of people, the level of interest is going to peak. Supply and demand. There's going to be more demand. There's going to be more competition. And I think as a result of all these thoughts and realities, that this fall and winter is actually a really good time to purchase real estate. Happy to discuss it more with you on a one-on-one basis, or just to ask a question. Anything in the world I could do to help you out, and I am here for you. So have an awesome weekend. Be safe, be good, stay dry. This rain is insane today. It's endless. We'll talk soon. Thank you again. Jim Alfano here. Looking forward to hearing from you soon. Have a good day.